Well, good morning. I want to talk about the short squeeze that nobody saw coming that was just so obvious. It's right in front of you, okay? And since we're doing this long, multi year stair step process, people just they can't put it into their heads as even a potential idea. Sure, they could put an 80% downswing into their mental framework because it's so vibrant and still so stuck in their head from FTX days, but they can't imagine a short squeeze to the upside. So let me break that idea down for you a little bit. Bitcoin is the one thing that has 21 million hard capped supply. Every single other thing, every other asset. Okay, now, yes, it's inflating, but the schedule is programmed, right? So it's already less inflationary than gold, and every 4 years it goes down to basically nothing, right? And then no more will be issued ever after 2100. So every other thing, stocks, commodities, fiat, they all can be their supply can be expanded depending on how hard they really want to expand it, right? If it's a commodity, they can drill more, mine more, whatever. Stocks can be issued at a wild rate depending on the seat. We'll touch more about that, but the CEO and the prime brokers and all that. And then fiat, of course, is dictated by a group of people at central banks and powerful banks that can create money out of thin air. If you haven't kind of watched that Richard Werner Tucker Carlson interview, whether or not you like Tucker, it's a very it helps you understand how the banking system exactly, in layman's terms, creates money out of nothing. It's very good. I would suggest going to watch it. Anyways, the short squeeze thesis is that not only from a psychological perspective does it seem impossible to people, right? They can't wrap their heads around $1 million price target or higher, right? They're so fixated on this 100,000, and that's something I've talked about with recently to people is this idea of this $100,000 anchor point finally dissolving as we break away from it to 200, 250, 300, right? And then everybody starts to become focused on a million, right? Because 100,000 seems so crazy at like 10,000 or 6,000 or 17,000 or whatever. It's felt so far away. And now we've had enough time to normalize it, to digest it, to where it feels uh, comfy in a way. And you need to start, if you can start expanding your next anchor point much higher, you can start to think about, okay, well, how could we possibly get there? And this is definitely the way it could happen. So imagine when a normal stock goes up, right? You have two ways in which are two obvious ways in which the supply can change on the sell side. So the CEO could decide, hey, wow, we just had a major run in our company. Let's dilute some of the shares so we can raise some money so we can reinvest in capex or pay people more or pay myself more or whatever the board of directors ends up deciding, right? So they can do that at any point. You don't know, and that's going to create more of a bearish tone, right? It's going to create more supply even if there's a lot of demand. The next thing that could happen is, all these hedge funds or big money players that might um, have all their resources going towards valuing stocks properly, price to earnings, multiples, all this stuff. They might come in and say, whoa, that stock is extremely overvalued. We're willing to put a lot of capital to work to short that stock, and we'll pay high funding rates or do whatever we need to do to get those shares to short that stock, right? Because they can pretty accurately understand a value. They can put a pin on where they think it's, you know, supposed to be worth, and then they can attack that. All right. We saw that in GameStop. GameStop's the perfect example of this. Diluting the shares, stopping the exchanges, the halts on Robinhood, whatever happened back then, a bunch of funds coming in to short it. Eventually, there was gravitational pull on that price. Bitcoin is different. There is no CEO to decide, hey, I'm overvalued. I'm going to increase the supply of Bitcoin. There's no board of directors that gets to decide that. And then tell me a fund that, other than just their opinion, can just ever so properly price Bitcoin. Like, you can't tell me Bitcoin's not worth 250,000 right now or 50,000 right now. Now, look, I get it. The price is what the price is, and I do believe that. But I'm saying, like, do we know if this is fair value for Bitcoin? Is this what it's fundamentally supposed to be worth based on like historical projections and multiples and price to earnings? No, there's no earnings, there's no multiples. It's just a number. So if and when we keep going up this I'll say when, because I think it's just for sure going to happen. We keep going up this global adoption S curve, right? Let's just pick a number and say we're 10% of the world has adopted Bitcoin, which I don't even think it's that much. All right. And we're at 110,000. Imagine we get to 15, 20% of global adoption, right? And the demand for this increases and stable coins come online, and then Bitcoin becomes that store of value that people are always going in and out of, right? And you have this huge influx of demand. Well, again, the gravitational forces on this are going to be much less. There will be, of course, there's always going to be sellers, right? Higher prices creates lower prices, right? Because eventually people will create supply and distribute their coins. But on the margin, it's just so different when it's capped like this because you cannot increase the supply at any point. There is no CEO or board of directors that can create that first gravity point, right? Of issuing shares to reinvest it in mining or the Bitcoin capex cycle or whatever, right? They can't do it. That doesn't exist, right? There's no people doing that. And then the secondary one is hedge funds. They don't necessarily know how to do this. So maybe if 50 hedge funds were going to come in and short GameStop, maybe only 20 come in and try to short Bitcoin at 250K, right? Because they're just on the margin, there's going to be people that are like, we don't know how to properly value that. So we're not going to go and put billions of dollars to work to short against this. And for the ones that do, now this is the fun part, the ones that do, they got to go find those shares to sell against it, right? And there's ways to source the availability to short something. And that is through like margin accounts, people that are willing to lend out their stock. And then it's like prime brokers and exchanges and OTC, right? But if there's so much demand for something and people want to find and they're trying to find shares to short, but exchange, like the ultimate bearer asset, right? People are pulling it off exchange, that takes it away. You have different treasury companies and different ETFs that have to have fully backed Bitcoin, so they can't just go free-nilly lend this out, right? So it gets less and less likely that you're going to be able to find shares, and when you do, they're going to be charging an arm and a leg, multiples higher for you to borrow those shares to then short. So you have less people, more expensive to short, and you can't increase the supply. And you add in the fact that we have gamma squeeze potential here, just like any other stock or options play. Like we could have the most, and if you haven't traded before and you haven't seen like an illiquid move, parabolic move to the upside, like you're in for a treat. That's where I think a lot of people don't understand that you could go from 110 to 130 to 150 to 180 and then all of a sudden have an illiquidity situation come up where like exchange values or exchange balances are really low. It's becoming hard to short. People can't turn off the exchanges because or else people will take their money off of there. And there's nobody to start having a meeting being like, we should dilute the shares. It's going up too fast. No, that's not there. So you could have points where there just aren't that many sellers up the book and it could gap, right, to 280, 500, 700. And there will be a point where people are like, okay, for fuck's sake, we're gonna sell this thing. Like, I don't care if we're not able to value it. We'll pay whatever we need to do for shares. But you cannot tell me that's at like 160K or 180K when you got Larry Fink out there saying 700K, Sailor out there saying it's going up forever, Laura. Like, its ultimate potential is to just go boom, 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 boom. And then you probably see, here's the thing is like, how do you take advantage of that if you know it's coming, right? Are we working sell orders up different exchange books? Are we going to be able to move on chain and move that money around and sell it efficiently? That's what I spend a lot of time thinking about, because if price stair steps up or whatever, you can make your decisions day to day. It's fine. But in an illiquid gap up scenario, it's going to happen like that. You won't see it coming, and you probably will only have 5, 10, 15 minutes to take advantage of that one super spike before it kind of settles back down at a normalized price. I like to kind of game plan for this. This is the right tail scenario in a global adoption, high demand situation. If you're not ready for it, you're going to miss out on it. And I just think it's something fun to think about. I think it can very much happen. And, include that into your arsenal is all I'm saying. Back to work.